Hey, what's going on, listeners? Welcome to episode 4 of Consulting with Ronald Raymond. I am your host, Cedric Deloach, owner of Ronald Raymond Consulting, and I look forward to really having this episode. I have one of my business partners here with me, a longtime friend of mine, uh, Mr. Tyler Coleman. Welcome to the show, brother.
Hey, said thanks for having me, man.
Yeah, no, we really appreciate you. We really appreciate you coming and taking some time to talk with us. So, just to kind of tell people a little bit about Tyler Coleman, he is the owner of the Votre. Did I say that right? Please help me. Votre Health
Yeah,
and Life Benefits.
yeah.
Yeah, so he specializes in insurance and also Medicare. So those are going to be some topics that we discuss today, trying to really demystify insurance and the thought processes around insurance because insurance is very important. Like when it comes down to, finances and financial planning, insurance is a huge part of it that a lot of people kind of miss a little bit. Is that kind of been your take on it as well, Tyler, in your experience?
Oh yeah, for sure. It's definitely I feel that it's one of the most misunderstood types of products out there, and it's often sometimes misused as well.
Yeah, and absolutely right. And our whole point of this episode really is to help the viewers, help the listeners, to be able to get free information and then know exactly what to do next after that. So all right, so we have a few questions for you, Tyler, to get your expertise on this. So
Mhm.
many people really, when I was doing my research on it and just even some people I just talk with, a lot of people feel like insurance is just another bill, because my wife worked in insurance for a while and 10 plus years ago, and one of the things she brought up was, a lot of people come in and they really needed insurance and she would try to suggest it to them, but a lot of people just would think like, oh man, it's just a really another bill. So, like, how would you explain the fundamental purpose of insurance in language that everybody can explain, or can understand?
Right. So with insurance, especially life insurance, said I would say it mitigates risk. So we got to think about life insurance as a safety net for families. Because what it's going to do is provide financial relief during economic hardship if someone passes away. So that's basically what it's designed to do. It's designed to mitigate or eliminate risk, and it can also be used as an alternative savings tool.
Mhm.
Not many people know that.
Yeah.
Hmm.
Absolutely right. No, and even when I think we were very young when she started working at State Farm, and that's the insurance agent. That's the first thing he suggested for us to do,
Hmm.
just even from a saving standpoint, like get into this, So, um, but why do you think some of those things are essential for financial stability?
Because so let's just take you for example. If something were to happen to you right now, said, and just think about your family, think about Gap. What economic hardships could you foresee them having if there was no life insurance in place?
Oh, yeah, it'd be pretty bad. Whole house, whole mortgage to pay for.
Right.
You know?
So, see, that's that again, that ties back to the purpose of insurance. It mitigates that financial burden that's going to be on your family if something were to happen to you.
Yeah, yeah. And these are real life, things that does happen to people. Absolutely. So what would you say are, two or three myths or just misunderstandings that some people have about insurance?
All right, so let's tackle two myths. Now, I would say one that I hear quite often is, oh, well, I got insurance through my job, so I should be good.
Yeah.
Right?
Yeah, I said a lot.
Well, okay, it's good that your company offers life insurance, but here's something that you have to ask yourself. If my company fires me, or if I lose my job, or if the company shuts down, that insurance isn't going to follow me most of the time. I'm going to be out for insurance coverage. So that's one thing that you have to take into account. Now, another thing that we have to consider with the insurance that you have through your job is look at how much your family would get if something were to happen to you, and really ask yourself, the death benefit that my family would receive, would that really be enough to cover my mortgage, car loans, credit card debt, any type of debt that I have, to make sure that they don't have any financial burdens that come from me passing away. So most of the time what you'll find, if you really analyze your life insurance policy that you have through your job, you'll see that sometimes it won't be sufficient to cover all of those things. So what would be recommended would be to not not get rid of the life insurance policy that you have, that the employer offers, but to get supplemental life insurance coverage as well to help fill in those gaps.
Mhm. That's
Now, oh, go ahead, go
no,
ahead.
no. You go ahead, finish up.
So that's basically what I would say is one of the top myths that I hear. Now, another myth that I hear a lot is life insurance is a scam, right?
Yeah,
And
yeah.
that couldn't be further from the truth said, because what most people don't understand, life insurance has been around for hundreds of years. It's
Mhm.
been around for generations, right? Because what it is it's a time-tested, proven financial tool. Now, let me ask you this. Did you know, said that I know you used to work at a bank. Did you know that banks use life insurance as their financial strategy?
No, can't say I can't. I can't. I'll be honest. I can't say that I did.
Okay, okay. Now, what we're about to do, we're about to get into a very insightful website here. So, that website that I sent you,
Hmm.
if you can pull that up and share screen, because I want your audience to be able to see this as well.
Let me know when you got it.
Okay, I can see it. So, what do you see at the top of the page there?
The bank or just was the name? It's banks ranked by life insurance assets.
Right. So, I know you used to work at Regions, correct?
PNC
PNC. Okay,
number
so let's
three.
talk about that.
Hmm.
So, you see PNC is top three. So, how much cash value life insurance do you see, or like life insurance assets do you see that PNC owns?
Yeah, 11 billion,
Right.
not million.
Right. They don't
With a
own 11
B.
billion. They own a little over 11 billion. So how much does JP Morgan and Chase own?
12, 12 million.
Right. And then
Mhm.
at the top, who's number one and how much they own?
Yep, 25 billion. Bank of America.
Right. So the question then is, if life insurance is a scam, then why do banks own so much of it? Billions of dollars of life insurance. That's the question, right?
Hmm.
So here's what banks do. They take what's called a bank-owned life insurance policy, right? And the banks, they pay the premiums on it, they own the policy, and they're the beneficiary of the death benefit. So with bank-owned life insurance, right? The life insurance, or the cash value, it grows tax-free. Something else that it does is it has tier one capital treatment. So it's recognized by the FDIC as a tier one capital. Something else with life insurance that is a benefit that it offers is it's able to have predictable and stable returns. Now, again, with banks, when they take that life insurance out on that employer, they know that they can grow money with predictable outcomes.
Hmm.
So that's why with banks, again, because I hear that again, I hear that a lot, how life insurance is a scam. I even hear radio gurus on YouTube. You may have even heard some of how they'll say that life insurance is a terrible place to put money, but banks, they own billions of it.
Yeah.
And it doesn't just work for banks because cash value life insurance, it can work for individuals like you and me too. Now, here's the reason why I say that, and I have examples of that as well. And I want your audience to do is fact check me on this. So, with life insurance throughout history, we have some good examples. Now, said, have you ever been to Disneyland or Disney World?
Disney World. Just
Mm-hmm.
went.
Right. So, when it comes to cash value life insurance, it's possible if that didn't exist, we might not have Disney World. Now, here's why I say that because with Walt Disney, when he was trying to get Disneyland up and running, he kept getting rejected by banks, right? So, what he did was he pulled $50,000 from his life insurance policy, which would be equivalent to over 500K today.
Hmm.
He was able to use the cash value from the policy to help fund the project. Now with Ray Kroc and J.C. Penney, Ray Kroc started McDonald's. J.C. Penney, what they ended up doing was when they had to make payroll for them for the company, they pulled money from their life insurance policy to help make payroll for the employees. So that just goes to show you how cash value life insurance, especially cash value whole life insurance, it can be an effective savings alternative and it can be used to make purchases on other things as well.
Hmm. But why do you this is all, I mean, this is all great information for not only the viewers but even me. But why do you think that myth is so common about the scam, and and why do people feel that? Well, why do you think that's so common nowadays?
So I would say it's two things. First, how I mentioned how radio gurus on YouTube they spread misinformation, and they've heard stories about how life insurance agents rip people off,
Yeah.
and I don't refute that statement. I mean, I know that's true. Life, you have bad apples out there. You have life insurance agents that have really scammed people
Yeah.
very badly, and then bringing that to the second reason, again with the life insurance agents, what happens is with life insurance, the way that it's supposed to be done with whole life, I'm talking about whole life insurance here, is the policy is supposed to be structured in a way that benefits the client. So that just seems like common sense, right?
Hmm.
But here's what happens with agents, our commission is tied to the base premium and death benefit. So the higher the base premium is, the more commission we make. And the policy is not structured for maximizing cash value. Now, if you know the way to figure out if you're really dealing with a trustworthy agent is he'll structure the policy to make sure that it's maximized for cash value. So when the policy is maximized for cash value, then we as insurance agents we take a commission cut. We make less money when the policy is structured
That way.
maximum cash value, but you're putting more money in the client's pocket.
Mm.
What you'll find said is that you have insurance agents out there that they want to line their pockets. They want to make as much commission as they can while it hurts the client.
Yeah.
The way it's supposed to be done, you want that cash value maximized in order for the client to benefit from the policy in the long run.
Wow. Now, and that's information, that is very common. right? That's information that I've heard before.
Mhm.
Sometimes you get your insurance agents that, they go door to door, right? And those have been at times, um, whether it was a scam or even if it was legitimate, that people have had issues, which then now, of course, you know how things spread now like wildfire. So the whole point of having you on here is to use your expertise to really explain to people um all these common myths, and then let's really try to break it, because these things are really in a sense handcuffing people with as you mentioned, misinformation, things like that. And I love the fact that I didn't know that website was out there until we talked today. So
Right.
as you mentioned, like, go fact check it, guys. Like, you can do your own research and find a website just like that. I would have never knew it existed, where you can actually see exactly how much a bank has in life insurance assets, which is actually very important. You actually need to know these things about banks as well, to know um whether or not they have the assets to back up what they're offering you or what they're providing. So that's all really, really good information. So we'll appreciate it. So we'll kind of dive a little bit deeper, right? Let's dive a little bit deeper into um the how portion of what we want to talk about today. So when we're talking about life insurance, could you briefly explain the difference between term and whole life insurance to our listeners? Because I'm pretty sure most of our listeners, they have heard that term before, whole life, term. Could
Mhm.
you explain a little bit of the core differences between those?
So with term insurance, think of it as renting. With whole life insurance, it's more like owning. So term again, it covers you for a specific term, 10, 20, 30 years, and then after that, you're not covered anymore. You have good situations where term insurance, it makes sense. I think convertible term insurance is a very great product, because what you're doing with convertible term, you're think of it as you're locking in your insurability like at a young healthy age. Because sometimes what individuals do with convertible term is they'll convert it over into a whole life insurance policy, or permanent life insurance. So, what whole life insurance is, what we've been discussing, is it covers you for your whole life. That's what it's designed to do. You have different components of the policy that builds cash value, and then once you're at the time of your passing, if something happens to you, your family will receive a death benefit.
Yeah, and that's something that I get phone calls all the time about, hey, upgrade from term to whole life. And I think the term that you use, I mean, this is very basic, or very, very easy to understand between a rental and ownership.
Right.
So
Right.
term, rental, whole life, ownership. I think that's a excellent way to break it down. So I guess to kind of, go a little bit deeper into that. So do you think there's I guess a rule of thumb, or a simple rule of thumb for people who might like, who how do you find a better fit? Which is a better fit for me between the two? Like, what's a good rule of thumb for everybody to consider?
So I would say a good rule of thumb is definitely meet with a licensed advisor that has your best interest at heart.
Yeah,
But I've heard an experienced life insurance agent say, when you're having trouble paying bills and um, you're young and healthy, term insurance can be a good route to go. If you have other responsibilities where you might not be able to afford whole life insurance.
yeah,
But other than that, I mean, cash value whole life insurance is, I do think that it's a good product
that's okay.
for individuals. So it depends on a person's situation. You would have to sit down with an advisor again that has your best interests in mind, and really put down on paper what's the best route to go for your situation currently. Is it convertible term, or can we look at a whole life insurance policy?
Okay. Okay. So in this case, rule of thumb, guys, talk to some respectable, respected, trustworthy insurance agent. So going like a little bit beyond the basics a little bit, what are one or two types of insurance that can become increasingly important to build wealth, which is very important, or even just start a family?
So I have to, I don't want you to think I'm biased, said, but I have to take it back to cash value whole life insurance because the thing that we have to keep in mind, and I'm going to send you an article on this later, but cash value whole life insurance is an effective savings alternative because it can build cash value over time. And I'll explain why that can be beneficial. So let's say, for example, you like the responsibilities that comes with life. You at one point you may need to get a new car.
Yep.
So let's just take that example. If you're someone that needs to buy a new car, instead of having to go to the bank for